everybody. August 27th, 2024. You can see on the day we're starting off with a small gap down and we have a wedge here, and the bears are going to try and get a breakout below the wedge. We're going to go below yesterday's low. It's it's a pretty important magnet, especially considering on the daily chart, it's a failed breakout above the IOI and a failed breakout above this high. And now the bears are hoping that we're going to get a big bear trend starting with this bar. It's most likely going to be a minor reversal, but the bears, what they want to see here is a strong breakout with follow through below yesterday's low. Bulls, on the other hand, are going to try and get some sort of double bottom. I would like to see, a lower low double bottom, if anything, because I think that we have to test below yesterday's low and see what's there, if there's sellers or buyers, before we end up doing anything else. So we'll see what we end up getting, but I do think we're going to go into this area and then probably start to go sideways. Generally, when you break out of a magnet or a daily chart magnet, such as the prior day's high or low, that should have worked. Yeah, hold on, I gotta change something on my own screen. My study's a little weird. Okay, so we went below yesterday's low just now, and we're trying to get a breakout below the wedge. 1, 2, 3. The bears want a breakout below and possibly a measured move down, maybe somewhere down here. The bulls, they want the breakout to fail and they want a reversal back up to yesterday's close, maybe this tight trading range, maybe this general area. So what am I going to need to see to buy? Well, probably a micro double bottom, some sort of double bottom. If 1 closes on its high, I will not buy. If 2 is an inside bar, you might be able to buy. We've been getting inside bars for the past 3 days on bar 2, so it's possible we get it again here on day 4. So we'll see what we end up getting. If bar 1's a big bear bar closing near its low, some bears might sell the close, hoping that we've seen the high of the day and we're getting a breakout below the wedge. We don't test back to the wedge. So currently there are bulls who bought below this low, and they'll probably scale in 5 points lower. Let's say we go 5 points lower, somewhere down here, and they're going to look to get out of their longs when we test back to this price. So we'll see if the bears can end up holding the market below that low, but it doesn't look like they're going to be able to. So if bar 1 is a bear bar closing near its low and bar 2 is a good looking reversal bar, you could buy that as a credible low of the day. If bar 1 closes on its high here, I'm still not really all that interested. I think it's better just to wait. It's a big failure from yesterday's low, and it's a credible low of the day if this can close on its high. But I would still just rather see follow through or something. It's still a big reversal down, right? So we still did get a reversal down to yesterday's low. Obviously, it reversed back up, but this is still going to be mostly a trading range bar is the point. So a reversal bar here is not as strong as it could have been for the bulls had it been a good looking bull bar. Like I mentioned on the daily chart, when you test a magnet, like you have the prior day's low, you usually will start to reverse up or break below. You usually pull back before you get the breakout if you do get the downside breakout. Right now, it looks like the bears are failing. Okay, so bar 1, a bear bar, but a big tail on the bottom. The bulls, they want a failed breakout below this low and a big reversal up. And the bears are hoping it's the start of the bear trend. They have 3 straight bear bars going into yesterday's close, and then a gap down, which will act as a bear bar, and then another bear bar here. So the bears could see it as follow through. If bar 2 is an inside bar closing near its high, it's low probability, but it'll be a reasonable buy. I might take it. I'm not sure. I'll probably just wait and see how it looks, but it would be credible to buy. If bar 2 is a big bear bar closing near its low, some bears might sell, hoping that it's the low of the day, but it could just be a second leg trap down on bar 1, up on bar 1, down on bar 2. So could be a second leg trap on a lower time frame. So I personally, if we get a big bear bar closing near its low here, I'm just going to wait. So we're starting to reverse up on this bar. You can see bar two, we're starting to reverse up. Am I going to buy if bar two closes on its high? I don't think so. You definitely can. It's a possible low of the day, but I don't know. It's true that, it's kind of funny. The worst looking inside bar we've had. So, I mean, this was the best context, but we had a bear bar closing near its low, was not the high of the day. Nope, I'm on the wrong. I'm on my personal chart. We had a bear bar closing near its low, was not the high of the day. We have a bull bar closing near its high, was not the low of the day. Then we have bear doji bar, and it ends up being the high of the day. So let's see what we get here. What if it's an inside bear bar closing near its low? Some bears would sell. Still probably only a 20% chance that it's the high of the day, and then we get a big bear trend. Remember, this is, reasonably strong bear bar on the daily chart. So it's possible that this just gets big follow through and we get a big bear trend day. I'm not going to say it's likely, but it's possible. So uh, we might end up breaking out below bar one here. Again, we could get some sort of sell climax. So we broke up below bar one. We could get some sort of sell climax attempt here and some sort of double bottom down here. So it's possible that we get some sort of bear trap on the open. I think that's reasonable to keep in mind. So whether it's on bar three or let's say we get consecutive bear bars two, three, and then a small bull reversal bar, that would be a credible buy. There was a day, I think it was last month. I could find it, but it would just take a while. But more or less what we had was basically like five straight bear bars on the open and then a small bull bar, and we ended up reversing up from that area. And those are credible reversals because you have to keep in mind 50% of the time, no matter how strong the move looks, it ends up being a vacuum test on the open. So you have to keep in mind that if we do continue down, it might just be a vacuum test of something like this, maybe the 39 close, maybe this low, somewhere in that area. We don't know, but I think it's important to keep that in mind so that if you do get a bull reversal bar, you're prepared to take the trade and you're prepared to exit shorts if you are short, because reversals can often be a lot more violent on the open than you normally would expect them to be. So bar two, bear bar, closing relatively near its low. If bar three is a bull bar, I would like to see this trade below bar two and trigger and then reverse up. So I'd like to see a bar uh, like 57 yesterday, but close on its high, something along those lines. But if we get a good looking bull reversal bar here, it would be a credible low of the day and it would be a credible buy for a swing, and I will probably take it. The reason I want to see a trade below bar two is to trap the bears in who are willing to sell below two. So we've traded below bar two. So if three is a good looking bull bar, I'll probably end up taking the buy. What am I going to do if I take the buy? Probably nothing for a while. It's more of a Walmart trade, if anything, because you're basically betting on the low of the day, right? So first off, consecutive bear bars, bar two, one big closing near its low. We are always in short. So some bears are short right now. It's not unreasonable to be short, but it's probably just not that ideal. The bears who are selling here, they're hoping this is the start of a big bear trend day, and it might be. Bar three is a big bear bar closing near its low. That would be another credible sell. However, if you can't tell, I'm a lot more interested in trading reversals on the open than I am trying to trade a trend on the open, because usually trends from open don't end up lasting because 80% of the time you get some sort of trading range open and you get a reversal or two on the open. So I'm usually more prone to looking for reversals because they're more common. So starting to look pretty good for the bulls. I'd like to see it maybe get a little bit bigger, but even if this closes on its high, I'll probably just take it. Betting on some sort of bear trap on the open. I'll go find examples. I have a few. Um, Second, traps in the open. There was a particular example. Just looking for a day. You know, if you guys trade regularly, you'll know the day that I'm talking about, but it should be in here somewhere. Maybe it's a June 7th day? No. Yeah, I can't seem to dig it up right now. It was from like a month or two ago, but anyways, there's a lot of good examples of traps on the open. So bar three is a potential bear trap on the open if the bar can close near its high. So that's what traders are going to be fighting about right now. Is bar three going to be a good looking bull bar? Because if it is, bears are probably going to be disappointed and have to exit their shorts, and bulls will start to look to buy. So for me, if this closes on its high, that's a really good swing trade and a good low of the day. What am I going to do? Again, if I buy above three, I'm going to just take the buy, put a stop below, and probably put a profit target, I don't know, 20 or 30 points above, and just walk away for a little while. Not on its high, but there's still a lot of time. Would it be stronger if it could stay on its high? Yeah. Ideally, the bar would be basically sitting on its high the entire time, but that's unusual. So you can see traders fighting over the close right now. So how big of a tail can this have, and I'll still buy it? If it has a one tick tail, I will still buy. If it has a two or a three tick tail, then I'll probably have to think about it. So it's getting larger. I would like it to not get much larger than this. This is still fine, but I don't want it to get a lot bigger than this. A lot of times what happens is it'll get bigger and then it'll start to sell off and then it won't close on its high. So it's still reasonable. Getting a bit larger. So some traders have to adjust their position size, trade a little bit smaller. Yep. So that's not good enough for me. Had it closed on its high, I still would have bought. But that's the problem with these bars is sometimes when they get larger, they end up with a big tail on the top, and it becomes disappointing. So still looking for a reversal up, but I thought that three could have closed on its high, and that was a really credible low of the day. I think your job as a trader early on in the day is to pick out the possible highs and lows. So for the bulls, it's still a failed breakup below the wedge and theoretically a possible high of the day. But how many of you want to buy above bar three with a big tail on the top and a tail on the bottom? Not many. The bears who sold below two are still disappointed in three, so we'll see if they buy back shorts here or if they sell more. The bears are hoping that they still have their bear trend, right, from bar 79 yesterday, and they want to break out below the wedge to become successful. And they're hoping that basically what's going to happen is this bar three is just going to end up with being a pullback. You can see we sold off below bar two. So we were able to sell off more than 5 points below yesterday's low. So the bears, they bought yesterday's low during bar one, and during bar two and three, they were able to scale in 5 points. And then you can see the upside of bar three after the bulls scaled in, they were able to sell out of their longs. Their first entry at break even and their second entry with a profit. What if four is an inside bar, bull bar closing near its high? You can probably still take it by. It would be a similar pattern on it. If you just look like a 10-minute chart, would just end up being the same trap pattern on a 10-minute chart. You can see bear bar closing near its low, and then if this bar 2 is an inside bar closing near its high, or sorry, if bar 4 on the 5-minute chart is an inside bar closing near its high, it'll be a bar closing near its high on this chart as well. So you can still do that if 4 is a bull bar closing near its high. I don't think it's as strong. I would have preferred if 3 closed on its high and we went straight up from there. The more we go sideways, the less I obviously like the trade in this context. But what if bear 4 is a big bear bar closing near its low? I'm not really willing to sell. I'm more looking to buy in this area. So if it sells off without me, that's fine. And I do miss a lot of trends because of I'm not willing to I'm not willing to sell in certain areas, and because it's more likely we're going to rally. And so if it does sell off, it's not impossible that we sell off. It's still very possible, but I prefer to spend my energy looking for buys, and I just end up letting the sell signals go, and that's fine. Eventually, it's part of the being open to everything thing. Eventually, I'm sure I'll get to a point where I can confidently spend my energy in both directions. But, I find that I end up doing a lot better when I'm just focusing on one specific side, whatever I believe is more likely, because usually it is. And so I just look for that specific setup. So disappointing that 3 did not close on its high. If 4 closes on its high, it's still going to be fine for a possible low of the day. It's just not going to be as good because 3 is your buy signal bar. So it seems more likely that we are not going to end up getting bar 4 closing on its high. It hasn't really been up there very much. But if it does, it's still going to be a credible buy. Still 3 possible low of the day. And then you get a bull bar closing near high 4. So still not very likely that it's the low of the day, but I still think it's okay to take for a swing. So if 4 closes on its high, I'm probably still going to buy it and just put a stop below 3. Same plan, just go do something else for a little bit. It's reasonable to think we've seen the low of the day if this can close on its high. So what's the target? I don't know. Maybe somewhere up here, maybe somewhere up here. Maybe this gap, right? So from yesterday, maybe we go close this gap, something like that. That would give you good risk reward, risking 12 points, trying to make a little over 30. And your probability is not high, but it's reasonable enough, maybe 40%. So I don't think we're going to get the bar closing near its high. Yeah. So it's very possible. You can see we got a micro gap down there at the close of bar 4 and the open of bar 5. I think a lot of the bulls were buying, hoping that 3 or 4 was going to close on its high. They were front running it, and they just don't. So this goes up, it's going to do it without me. I mean, I'm not going to just force myself into the market. It's not really a great idea. I think we're going higher, but I don't know if we have to pull back first. Possible 3 is the low of the day, but I'm not willing to buy above bars with huge tails on the top. Again, my job is to look for the best 1 or 2 trades in the day. So that's how I think of day trading. That's what I feel like my job is. And I don't think buying above 3 or 4 is one of the best trades on the day. Just too aggressive. And if I lost that trade, if I took it and I lost it, I would feel really annoyed with myself for taking it. And if I took it and I won, I still wouldn't feel all that great about the fact that I took it. So you can see, we're starting to rally. I wanted to buy, but there's only so much you can do. I'm not going to take trades that I'm not comfortable with. So for me, am I going to buy if 5 closes on a tie? Probably not. I think that I'm going to get a chance to buy a pullback, and the reason I think I'm going to get a chance to buy a pullback is because 3 and 4 have big tails on them, and 5 is looking pretty climactic. So it's again not wrong to buy above 5. Probably going to become by the close here, but I don't know. I think this is obviously going to get a second leg up, but it just depends. How much are we going to pull back first? So pretty common to get trapped out. Very big part of trading is sometimes you're just going to get trapped out of trades. But what sucks a lot more than getting trapped out is getting trapped in. So just keep that in mind if you're so really worried about getting trapped out and you end up forcing a trade or two and then you get trapped in. It's a much worse feeling to lose money than it is to not make it. So you can see we're rallying here on bar 5. I think 5 is mostly bears giving up. You can see we're getting a big tail on the top. To me, this looks like a trading range open. I still want to buy, but I want to buy after a pullback. I don't want to buy the high of bar 5 nearly as much as I did. What are the odds we've seen that the low of the day at this point, that 3 is the low? 50% probably, something like that. Maybe 55%. Probably better than 50%, but probably not too much higher. I still think we're gonna. So what am I looking to buy now? Well, I want to see some sort of pullback here. I don't think buying the close of 5 is all that awesome. I think we're probably going to pull back. You can do it for a second leg up, but for me personally, I'm going to wait for a pullback and then look to buy for a swing. So if we get a pullback here and then a good bull bar closing here, it's high, I'm going to buy it. But I'm just not going to buy with all these tails on the top. There's big risk here, and we have tails everywhere. So I'll be interested to see if the bulls can keep this gap open. For the bears, they're still expecting a lower high from this to this, so they're hoping this is a pullback. However, this is too dramatic to be a pullback. I think this whole thing, the move down is a leg in a trading range, and this move up might be a leg in a trading range as well. So you want to see us pull back to the bar 1 high for the bears to make money, and you want to see a reversal up from that area. End up getting here. Still a breakout for the bulls, right? So this is still a really good-looking bull bar on some other time frame, but it's going to get a second leg up. But the question is, how deep do we pull back? Generally, about a 30% chance that we just go down here and then get the second leg up. Usually, about 70% of the time, you're going to get the second leg up before you trade below the low. So looks like we're forming an inside bar here. Do you want to sell below bar 6, even if it closes on its low? Not really. I don't think the context is all that great. The Bears are hoping it's some sort of low 2 on the open, but I suppose it would be a low 1, but I don't think it's all that great. If the Bulls can get a bull close here, well, regardless of if they get a bull close, this is a high one for the Bulls. You can see the gap with the 1 high and the bar 5 low. The bar 6 low ended up closing. So the question now is the bar 4 high and the bar 6 low going to close? And the answer is probably. So the Bulls have a high 1 here. It's not very strong. So bar 7. Again, sometimes you get a crazy move on bar 7. It's possible we just get a giant bull bar here, but if we do, I'm okay with having missed it. I don't think there's really anything for me to do. We might end up going outside down and closing the gap with the bar 6 low and the bar 4 high. It's a weird concept, but I think that, and as a trader, you make most of your money by not losing it on dumb trades. So, every time you sit out of a trade, you kind of, every time you sit out of a bad trade, in a way, you just made money because you saved yourself money. And then, you start sitting out of bad trades consistently, and you find the trades you do take, you don't lose very often, or not nearly as much as you were, and you'll end up making money a lot more frequently. So we'll probably go outside down here. There's a lot of time left in this bar, and it's already pretty big. So bar 7 might end up being a dramatic bar. What if we do go outside down? I kind of hope it does, and we start to go a little more sideways here. But I hope 3 holds as the low of the day, and then we get some sort of higher low and a bull bar closing near its high that I can buy for a swing. If we do get a higher low and a bull bar closing near its high, my stop will go most likely. But it's obviously a little bit dependent, but most likely my stop will go below 3. Reason being, you're trying to predict the possible low of the day, and the market might pull back before it rallies. If we do get a higher low and a bull bar closing near its high, it's probably going to end up pulling back before it rallies because we didn't go straight up here. This was the chance for the bulls to have the market go straight up, I think at least. If R3 had closed on its high, there was a real chance that we went up going straight up. You can see the bears who sold up too were obviously disappointed in buying back shorts, but they were able to buy back shorts at break even. Would have been a lot worse for the bears had 3 closed on its high and they had to buy back their shorts at a loss, and more bears would be covering shorts as we rallied. So what if 7 closes on its high? I'm still not going to buy it. Yeah, it's a bull micro channel. Yeah, you probably can, but it's just not all that great. Again, I would really like to see the market pull back here, which is part of the reason it probably won't, but I'm not willing to buy at the market. Kind of interesting, over the last week, the market, a lot of the signal bars on the open, at least the opening 18 bars, I would say for the past couple of days have just not quite been what I need them to be in order to take the trades. And that happens sometimes. Sometimes the market just gets into a place where it just doesn't quite have great signal bars, and that's okay. Sometimes you just have to sit out. So again, I'm looking for this to pull back here. Am I going to sell below 7? No, I don't think there's really anything 7 can do to make me sell below it, even if it's a perfect outside down bar. If it's a perfect outside down bar, it would probably be a credible high of the day. However, I don't think it's all that great. I think we're probably still having upside bias today. Reason being, I don't think the daily chart sell signal bar was all that strong. So you can see, it looks like we're going to try and go outside down here. So bar 7, bears, want a micro double top, and a reversal down. So they're hoping micro double top, maybe 5, 7, maybe 6, 7, and they need a bear bar closing near its low to trigger the sell and be potentially good for the bears, but I don't think it's all that great. The bulls, they're hoping this micro channel is going to hold. They have a micro channel from bar 3 to bar 7. We have not traded below a bar since bar 3 went below bar 2. So this is a micro channel. The first reversal down is probably going to be minor. No one wants to sell below 7. I think ideally we would get a pullback on bar 8 here. So some sort of bear bar and trigger below 7. And then over the course of the next 4 or 5 bars, maybe any sort of bull bar closing near high would be a good buy. For me, you can see that there's a gap open with the 4 high and the 6 low. I think that, it's probably going to close. Again, I really would like to see the market pull back here and then get a bull bar closing near its high. There's obviously risk that a lot of traders want to see the market pull back here and get a bull bar closing near its high. So they buy a small piece at the market and put a stop below 3, betting that we're going to get a higher low anyways. And that's probably not an unreasonable thing to do. Those traders know that if they're willing to scale in, they're probably going to make money. They're just betting against a bear trend day. But the problem is if too many people buy the market, buy that small piece at the market ends up going up and it traps out the traders who are just willing to wait for a pullback. And they're not quite willing to wait at the market. So that's the potential price you pay for sitting out in this sort of spot. But at the same time, I don't really want to trade in this sort of area when I think the market's going to pull back. So I'd rather not sit through the pullback. I'd rather just see the pullback. Hoping we get it here. Most days have an opening swing, and I think it's going to be up today, personally. So hoping, really hoping for a pullback here, that I get to buy a pullback. So what if bar 8 is an inside bull bar closing near its high? You probably could buy it. Traders would argue it's a high 1 for the bulls. You can see the high 1 triggered above bar 6, but who wants to buy above that? Not many people. We're on a relatively flat moving average here. There is risk, there's as much risk as there is of an upside, the surprise to the upside. There's definitely also a risk that the bulls just give up and allow the pullback and you get a surprise to the downside. I think very occasionally you get just a really big give up bar, but usually, in this sort of situation, the bear bar should be relatively, controlled. And that, by that, I mean, it shouldn't be a surprise. So you don't want a bear surprise here. You want, maybe something a little bit worse than 2 for a pullback, and then the bull bar closing near its high. And if you get that, you can buy, put a stop below 3, take a chance we've seen the low of the day. Now we're going to get a couple hours of sideways to up trading. Just buy at the market, stop below 3, take a chance we've seen the low of the day. Yeah, probably. But I don't think it's the greatest thing to do right now. So again, I think the target for the bulls might be top of the channel somewhere in here. And if they're lucky, into this area. So might end up being an inside bull bar. We'll see if it closes on its high. Looks like it might end up being more of a doji bar. If it does close on its high, it's not unreasonable to buy and use the wide stop. So might actually see. Yeah, so story of the day so far. The bulls can't get a good looking bull bar closing near its high. Every single bull bar ends up having a big tail on it. It's kind of like yesterday, similar kind of moving in a similar fashion, which again that'll happen sometimes. But for me, I'm not going to buy any of these closes until we get a pullback. When the market's moving the way it is from bar 3 to bar 8, you have to keep in mind that it's possible that we just break up to the upside. It's not all that likely that we just race up without pulling back first. But like I said, low probability is not no probability. You do have to keep that in mind. So sometimes here, this is just going to end up rallying and you're going to be stuck on the sidelines, and that's fine. Sometimes, I think more often than not, you're going to end up getting a pullback and find somewhere you can buy. If it does rally a lot, so let's say we get 9 huge bull bar closing near its high, then it might be some sort of second leg up. So 3 through 5 is the first leg up, pullback 6, and then 7 through 9 maybe the second leg up, and we might start to go a little bit more sideways. Maybe we test towards yesterday's midpoint into this area maybe. You can buy above 8 and have the stop below 3. It's not wrong to do that, but for me, I would like to buy above a bull bar closing near its high, and that's pretty much been my qualification the entire day on bars 3, on bars 4. I was just looking for or a pullback and a bull bar closing near its high. Pretty much all I've wanted out of the bulls is a bull bar closing near its high, and I was willing to buy because the contact made sense, and I don't think that's a lot to ask. And when it's not a lot to ask and the bulls still can't do it, to me, there's something wrong with this trend. So I'm going to sit out. So looks like we are going to pull back here. How far? I'm not sure. Maybe 50%, maybe a little bit deeper. This area. We'll probably close this gap. Do you sell this? Whoa, whoops. You sell this if it closes on its low. I think the bars look good, and the logic of three, maybe a couple pushes up, is not bad. But I just think the context for the bears is not that good. Again, the bears here, we're hoping for a big bear trend day from the open with the breakout below this low, and they didn't get it. So I'm not really that convinced that the context for the bears is all that great right now. That being said, yeah, so no one really wants to sell below 9, micro double top 7, 9, but look at the tail. So I would like to see 10 trade below 9, and then maybe if we can get a bull bar closing near its high sometime after that, then I would be looking to buy. You know that we had a micro channel, so there's probably going to be buyers below bar 8 if we get there. Or there's going to be buyers below bar 8, and that should lead to a new high. It's more of what I meant to say, sorry. Traders who bought above 8, they disappointed at 9. See some of them selling out of their longs. Maybe they bought above 8, bought more below 8 during 9. So we'll see what 10 gets. So what would I need to sell? Well, I'm not selling 10. I don't care what it looks like. But if 10, 11, 12, maybe we get 3 consecutive bear bars closing near their lows, that would be credible to sell. For me, I'm looking for some sort of higher low right now and a bull bar closing near its high. We've probably seen the high or the low of the day at this point, and it's more likely we have seen the low. I think we will end up trading above 9 today. But again, I would like to see it go a little further down. So the bulls might see spike and then a pullback, maybe the start of a channel, maybe spike and then a two-legged correction, 1, pullback 2, and then they want a bull bar closing near its high. So those are all possibilities for what the bulls would, or at least a lot of the bull algorithms might be thinking. So what if 10 closes on its high? I still think that's buying too high. You can do it. We have this gap open, which is interesting, right? So the bulls have managed to keep this gap open, which increases the chances that we're going to get some sort of bull trend here. However, if 10 closes on its high, you're buying in a tight trading range from bar 6 to bar 10. So I don't want to buy that high. I'd like to buy lower. If 10 goes outside up and closes on its high, you could buy that. Take a chance that you probably just put a stop below 10 if you did that. It would be an OO pattern, so outside bar 9, then potentially outside bar 10. That would be a reasonable buy. I don't think the location is great, but the pattern is good, and the overall context for the bulls would be good. So if 10 is an outside up bar, that would be credible. But to me, it just looks like a tight trading range right now. Okay, so we're selling off. I think, the bears. Well, 1 second, actually, one more support close. So that's the signal for the bulls, but it's a tight trading range. And again, the bulls are failing to get a bull bar closing near its high. So for me, I am not willing to take the buy. The bulls are hoping it's a two-legged correction. So 6 and 9 are the corrections, and now we're going to rally up. But to me, I think this is just a tight trading range. The bears see the rally from 3 to 10, but they think it's just a leg in a trading range, upside leg in a trading range. And I probably more agree with that. So again, nothing really to do yet. Sure, you could have bought I don't know, maybe the 8 low for a scalp. But again, that's pretty much the only credible trade so far in the day, I would think. Sure, I'm sure, traders better than me have found other things to do, but there's not much for stop orders today so far. You can see how strong of a setup 3 would have been if it closed on its high, because it didn't close on its high. It had a pretty poor close, and we still went up quite a bit. So the bears who were selling below 2 knew they were taking a low probability trade, and they were just taking a chance that we sold all the way off and got a big bear trend day, but they obviously gave up pretty quickly, as they should, because the odds were against that. So if you're doing something low probability, a lot of times you want really good follow through. So an upside breakout on bar 11, but it's really hard to get long in here in a way that you're comfortable with. We did this yesterday where we went down in a way that was a bit difficult to get short, and then but you had a chance on 8. You could have sold 8, but we're going up right now in a way that it's really hard to get long. It is. You can just buy the market. It's true, but I'm not going to. Could be a wedge 1, 7, and then 11 if bar 12 closes on its low. So that's possible, but I'm not really willing to sell that wedge. The parabolic wedge. So we had a parabolic wedge yesterday, and we might have one today. But you have to keep in mind parabolic wedges are minor reversals. So we might get a minor reversal down for a couple of legs, and then get another reversal back up, maybe on bar, maybe a reversal back up bar 14, 15, something like that. Again, there was nothing wrong with buying the market and just taking a chance, but the problem with trading in that way is, it's going to work sometimes, but then, maybe it'll work for a week, right? You'll have a couple days during the week. Let's say yesterday you just sold the market and you ended up getting short and you made money, and today you just ended up buying the market and you made money. And that's fine. It's fine to do that, but the problem is you have to be really good at identifying context to be able to trade in that kind of discretionary way. And eventually what's going to end up happening is you're going to end up doing it on the wrong day a couple of times, and you're going to lose far more than you make or than you made on these days. So that's why I don't do that stuff. I used to. I've done it a million times before. That's why I'm saying that I know what ends up happening. I know where that road leads because I've done it. But anyways, the bears are hoping for a parabolic wedge on the open and at least a couple of legs sideways to down. If bar 12 closes on its low, you can definitely sell it, but I'm not sure what your profit target would be. Probably might end up being more of a scalp than anything. So I don't know. I'll see. I might sell it for a couple legs sideways to down. It just depends how it looks. I'm still considering because I'm still more bullish overall. So it's difficult for me to want to sell. Or so I think it's going to be a minor reversal. Maybe it's one of those situations where you try to get in on a 50% pullback. Again, it's got to close perfectly though. And it doesn't look like we're going to get it. So I'm probably just going to end up sitting out. If it closes on its low, it's possibly a parabolic wedge sell. But yesterday the parabolic wedge obviously didn't end up getting a good signal bar and was a very minor reversal, as parabolic wedges usually are. And in this situation, it might end up being the exact same case. As a reminder, there will be no videos on Thursday and Friday about live trading or about market reviews. There will just be a video on second leg traps and higher lows and lower highs that I have made. I made it the other day, and I'm just going to release it on Thursday. So bar 12, another bear bar, but sorry, another bull bar. It's looking like it's going to be, but again, I don't think there's much for us to do. It is notable that we have this open gap, and we now have this open gap. So if we're not able to get back here, even if we are, we still have an open body gap, but it's very possible the bulls have a couple of open gaps here, and it could be a small pullback bull trend day. One of the characteristics of a small pullback bull trend day is it continuously traps traders out. So you can see again, we ended up getting a tail on the top of 12. That's going to make traders hesitate. So one of the most normal things that happens on small pullback bull trend days is the market constantly looks like it's going to reverse, but it just continues to work higher the entire day. So let's say 13 is some sort of pullback, and then 14 is a bull bar, and we do not close the gap with the bar 9 high and the bar 12 low. Then it would be reasonable to take buy and take a chance at a small pullback bull trend day. You probably have to put a stop below 10, but it's just reasonable. But you're basically betting on the gap staying open and the bear staying trapped. So again, it's reasonable to be long, but it's hard to think of an area that was good to buy. You could buy above 12 though. You could buy the close of 12. You could buy the close of 11. But again, none of these are, you look at it and say, yep, that's one of the better trades of the day right there. None of those are really that kind of caliber. So I'm not going to do anything. What are the odds we go outside up today? Right now, maybe 40%. I don't know, 30 to 40%, something like that. It's not very likely. I think a lot of that is honestly dependent on this gap staying open. So let's say it's 30% right now. I think that's reasonable. And then we get a pullback here, and then another bull bar closing near its high, and we do not close this gap. Then it might be more like 40%. So I think it would increase the probability a lot for the bulls if the next pullback does not overlap the bar 9 high and the bar 12 low. What if 13 closes on its low? I'm not selling. This is too strong. So I'm just not interested in selling anything right now. I'm looking to buy. I've been looking to buy all day, as I mentioned, after a pullback, but the market never gave a chance that I thought was reasonable enough to get in. You could have bought above 8 with a wide stop. Again, you could have bought the market and just put a stop below 3, but you can buy above 12 for sure. That's reasonable. You can see though, if 3 had closed on its high, why it would be more of a Walmart trade, because the market's going to go a little bit more sideways, and you're trying not to get trapped out. So you just put a stop below. If you had bought 3 today, you just put a stop below. You put a limit order. I don't know, 20, 30 points above, and you just go do something else. Watch an episode of a TV show. Do something else for usually 30 to 45 minutes. Usually if I take a trade like that, I'll have notifications set on my phone for when either order gets triggered, and then I'll reevaluate, or I'll give it about 45 minutes. And if neither has been triggered, then I'll take a peek at the market and see what's happening. So bulls want to buy, but we're definitely a little bit overbought in the short term here. Doesn't mean we're going to pull back, but we might. You can see this is getting stronger. So the spike up is starting to look like it's getting stronger than we did from 3 through 5. So instead of pulling back, the market's getting more and more bullish, which could be as climactic. Still okay to be long for any reason. Where do you exit if you're long? Well, I think your stop is below 10, but realistically, if you get a bear bar closing near its low, I think that closes the gap with the bar 9 high, the bar 12 low. That would be a big problem. To me, a lot of the bull argument right now is caught up in the gap between the bar 9 high and the bar 12 low. So if we do get another pullback here, like I mentioned, It looks like we're about to pull back. But if it does not close the gap with the 9 high and the 12 low, and then we get a bull bar closing near the high, you can just buy and be ready to die on the hill of small pullback bull trend day if the gap doesn't close. And if it does close, then your premise isn't valid. You get out. So for the bears, they see a parabolic wedge, 1, 2, 3, and they want a couple legs sideways to down. I don't care if we go sideways here for a little bit, do something like we did from bar 6 to bar 10 and just go a little bit sideways. But I think the gap between 9 and 12 is really important. So the bears are trying to sell, trying to get that gap to close. And the bulls don't mind if we pull back as long as that gap remains open by at least a tick. So 13 will probably get a sec. It is a parabolic wedge. Everyone knows that. So, by everyone, I mean, the bull and the bear algorithms recognize the parabolic wedge. So we're most likely going to get 2 legs sideways here, sideways to down, but it might be more sideways. The question becomes, is it sideways or is it down? And if it's just sideways, then the bulls might end up getting a small pullback bull trend. I'm going to pause the video for the next 10 or 15 minutes, I think, but you can see this is important. So we'll see if we end up getting a bull bar closing near its high here, or if we continue to go sideways. But I think the important things for traders here is, do we get a bull bar closing near its high above the 13 high before we get a bear bar, that closes this gap? So I think that's what traders are watching for. So here we go, right? We're getting the pullback. We have 2 legs. This is the first leg, and then the pullback, and then this is the second leg, testing back into this area. And you can see the bulls on 14 and 15 were not able to get a close above the bar 13 high. So now the question everybody's asking is, bull bar closing near its high above bar 13 before we end up going below the bar 13 low, or below the bar 12 low, and close the gap with the bar 9 high? Or are we going to get a bear bar and be disappointed? If we get a bull bar closing near its high here, I think it's reasonable to just buy and take a chance. We go outside up, small pullback bull trend, but you're going to sit through a lot of noise. So we're probably going to go sideways for a couple of hours. Usually, if you have a small pullback bull trend day, market will rally for, I don't know, 2 hours, something like that. And then it'll start to go sideways for a couple hours. And then you'll have a second leg up towards the later third of the day. So the question becoming pretty quickly here, what are we going to get? This is a bull bar not closing above the 13 high. You can probably still take it. Well, you can take it. A bull bar closing your high and bull trend, always and long. But I think a lot of times it would be better to wait. You can see the 2 legs sideways to down that we had were not all that down. They were more sideways to up, but that is the pullback that you got in the small pullback bull trend. So it was a bad low one, or I guess a low too short for the bears on 15, but no one wants to sell that. There's going to be buyers below. A lot of times when the market, so let's say, 16 for the bears, it was low too short below 15, and they're hoping we're just going to start to go sideways here and stop going up. The bulls, they know it's not a good signal bar to buy above, but they're trying to keep the gap open. So any bull bar closing above 13 will do with this high one. So I think that if we do start to go sideways, so let's say we do keep the gap open, we start to go sideways, you always look for a reversal up around bar 40. So usually if you go up or down, or the first, we're just using up in this case because we are going up today. Usually if you go up for the first, hour or two, maybe 2 hours of the day, you're going to go sideways, and then bar 40 is usually when the reversal will start to happen. So it's like a midday reversal, but it's more of just trend resumption. So bar 17, pretty important here. The Bears, they're hoping it's a parabolic wedge of some sort, 1, 2, 3, and then we're going to get a failed breakout above it. The Bulls want to break out above the parabolic wedge and a measured move up, which will take us above yesterday's high into that outside up target. So if 17 closes on its high, so it's now broken out above the bar 13 high, right? You can see some bulls are buying, trying to get this to close up in this area. So this is now a really important bar. So if 17 closes on its high above 13, I will buy and put a stop probably. I'll probably put it below 10, but I won't let 10 get hit. Basically, the moment this gap closes, I'll be out. But to me, I think it's okay to just buy and die on the hill of small pullback bull trend day if this bar can close on its high. You can see 15 was an outside, or sorry, 16 close, or the high of 16 is right at the 15 high and went below. So this is technically an outside bar. So if 17 ends up selling off and becomes an outside down bar, that would be consecutive outside bars and theoretically a sell, but not a great sell. Most likely not a great sell, anyways. We'll see. I don't know. I gotta see more what it looks like. I don't think I would take it regardless because we've had too much bull price action. But if it's a really good looking outside bar, you could probably take it. But I'm probably just not. Probably just gonna wait. So starting to become a bigger bear bar. If it does close on its low, you could probably sell it, but I just don't think it's all that ideal. So now it is now considered an outside down bar in my mind because it touched the 16 low. So this could be a final flag for the bulls, 16, 17. If we get a failed breakout below the outside down bar and then a breakout to the upside, that is a possible buy. Again, if we are able to keep the gap open. But this is now an OO pattern. Let's say that this bar just gets bought up and closes up here. It'll still be an OO pattern, but it'll be a lot more bullish. So if the bulls can get a bull close here, closing obviously above the 13 high, like I keep saying, then that would be a credible buy. And it might end up being just more neutral here. That's what it looks like. Sorry if you can hear a siren in the background. Right. So bar 17 might end up with a bull close here. Really going to be interesting. And it's bull close. Okay. So it's an OO pattern, 16, 17. It's theoretically a buy above bar 17, the OO, but it might be more of a final flag. If it is a final flag, it means we're going to come back to this price, even if we do trigger the buy. Granted, we still do have the open gap. So if you do buy, it's okay to just buy and take a chance. The bulls, they're okay. If we trigger below, it's theoretically a sell as well, by the way. So 16, 17, and 00 pattern. It's not a good sell, but it's it's a breakout mode pattern. So it's theoretically a sell below 17. If we get a failed breakout below 17 reversal up, you could buy that. But really just not much to do here. I don't know how much more there is left to the upside without us starting to go sideways first. This is starting to look like the final flag, like I mentioned. So we're breaking out above the 00, outside bar 16 and outside bar 17. If we get a bull bar closing near its high on 18, you can just take the buy and take a chance. And that's probably what I'm going to do. However, there's a very obvious issue with this trade if I take it. And it's that, first off, you're buying high, big bar, big risk. And we're getting into the time of the day where the market's going to start to go sideways. So for me, if I take this trade, I think you probably just buy, you use a wide stop, and you leave the market alone for probably most of the rest of the day. You come back later and try to add when you're getting a reversal up. But again, it just doesn't look like it wants to close near its high. All right, it might. Really interesting. The bull just cannot get a good looking bull bar, but we keep going higher. You could have bought above 17. That was reasonable, the 00 pattern. But I don't know. I'm not going to buy above a doji bar. So, oh well. I'm probably just going to be trapped out. My plan for probably the remainder of the day is, well, I think I'm just going to let this go at this point because, like I said, I was just looking for any good bull bar closing near a high. And we didn't, probably the most reasonable buy was above 12. And there was still a bit of a disappointing tail on top of that. So I think that it's still very likely that 16 and 17 was some sort of final flag, and we're going to start to go sideways. I do think, very realistic chance that we get some sort of small pullback bull trend day today, but we're going to have to wait a bit. So I think it's going to be, if anything, we're going to go sideways for an hour or two, and then we're going to get a midday reversal up. So I'll look for that. It's also very possible we just go sideways the remainder of the day once we do start to go sideways. So no real rush to do anything. But all right, I'm going to make this video a little bit shorter and just end it. I don't think that there's, like I said, I'm not going to be taking a trade even if 19 closes on its high. I think I'm going to wait until we start to go sideways before I do anything. So, all right, that's it.